Today I'm digging into one of the biggest questions on everyone's mind right now, and that is if Bitcoin is gearing up for a short squeeze from these levels, aka a hard and fast move to the upside, or are we at risk of a deeper correction? Let's break down the charts, the sentiment, and key levels you need to watch. My name is Paul Sampson. Welcome back to DataDash. All right, folks, so we had Bitcoin pull off one of the more bearish scenarios here at the highs, right? Which is one we were pretty well aware of had we came into it. And it was where we come up and you sweep that high, and as soon as you start closing candles back below, that does trigger basically a reversal, right? So we had a couple of key regions to look to. We had no support right there. And much like every single high where we've seen a pretty standard reversal like this where we take it out, we put in yet again another bearish harmonic known as the shark. Now, shout out to a few members in the Traders Club. While I was away over in Europe, they actually pointed this out in the group. Oddly enough, one of the members' names on Discord at least is Jaws, so ironic enough, and then T-Bone. So both of them, this is the JT shark to me, right? So they had identified this where, once again, this is a sequence of Fibonacci's that plays out. It plays on really everybody's emotions. You come on down and you take out the lows, right? So this was our low at the time. You take that out, making people think that we're going to head lower. You then come up and you take out the highs. Obviously, everybody gets extremely bullish, but the second you close back below that, this is a very valid setup. There are three major targets of this, one of which being the 0.5 Fibonacci, right? So we made our way down to that region in a hurry. You can actually see where we back tested it as resistance. There is no gold pocket support on this setup. It's usually straight down to the 886. All right, so that's where we've kind of found our legs at the moment. There was a untapped daily right here, and realistically, this box region is where I've been really looking for to see if we get a decent reaction here to get a sizable bounce back up, possibly even back to the all-time highs and towards that $130,000 mark. Now, I will point out we have a few key levels that for this week specifically are definitely on my radar to come back towards. And even though today is Thursday, we're getting a little bit towards the end of the week, obviously, as we come, but they are still valid levels, and it's these two weekly levels. You hear me talk about them, at least the weekly pivot pretty much every single week, and it's the average of last week that's likely to be met this week. I always say it's last week's average and this week's target, and those two levels actually sit right here. All right, so I'm gonna go ahead and take off this shark. I will say that there's still some room to the downside around these areas here, so technically we still could come down to this 110 and still be perfectly fine. This is a relatively valid setup still here. This is an area where we could see the reversal come in. I like this one specifically if we did, because more than anything, similar to when we came up and we took out the highs right here, right? This is a very easy trade for traders, especially you see that sweep. Many will come in with shorts, or they'll add the shorts at this area here. The problem after the fact of coming up and making that move and coming in a couple days later is that people will then start adding in shorts late, right? So even at these areas here, you'll see new shorts coming in, where if you're adding up and taking the trade up here, you have plenty of risk, and you can put a stop loss above, and you're obviously pretty well protected. If it starts to come back on you, you could close it out. However, the folks that are coming in to start shorting Bitcoin, basically betting that it's going to continue lower from this side, this is where we could start to see a short squeeze come into play. All right, and a couple of things back up, that the couple of key levels that I'm looking to the upside, that at least short-term targets would be something that I could totally see us popping up to. Still really wouldn't be anything necessarily that would materialize up there, but I would start to say if we start getting above these key areas, it would start to look a little bit better, and it is these regions here. And it is our monthly open, so if from where we are now, let's just assume that maybe we put in a little low here. If we start to climb back above and start closing above 115,717, I think I've noted that in the previous video as well, because I think we're trading pretty much right there on Monday. But either way, that is the key level for any continued upside at the moment, right? So that's where we could see that next little leg back up to this $119,000 area. But overall, if we came back above this region, I would actually start to target a move back up towards the highs again. And what would happen here is that it would be one of two things, right? So anybody that's took new shorts obviously would get stopped out, and the shorts are pretty aggressive at this area here, right? Because this is where everybody's looking at this, viewing this as a really bearish outlook, which technically it is. I've said that the whole time since we made it. It's not the best look, but a little bit on the contrarian side here is that I could just see us actually making a run back up towards this all-time high, back towards that $130,000 area. And currently, anybody that's looking for a long, more than likely going to be looking for the same setup here, right? Where once again, if you were looking for a short at the high, you want to see it take the high out, you come back and you close back, you enter here, your stop loss is here, and you can ride it down. For the, the ideal long here is to come down and sweep that recent low, okay? So you stop out everybody that's gotten long in this region. Obviously, over the last few weeks, everybody gets stopped out. You reclaim the low, and then that's when you come in for that new long, anticipating that price is going to go to the upside. What I like about where we are now is that we've not taken out that low. There's a lot of shorts that are coming in this region right here. And in a sense of a little bit of a max pain, just a local max pain. Obviously, this is not necessarily going to wipe out the entire market, but in a local max pain setup in the eyes of a trader, I could see us actually putting this in as our local low. Obviously, we need to confirm it by getting back above 115.717, and if that happens, we have the recipe to run it back pretty quickly, which is in turn a short squeeze, right? So that's going to squeeze everybody out that took shorts, even from all the way up here, right? So in short, we want to get back above 115.717 on Bitcoin to see any continued upside back. We have 2 untapped weekly targets for this week that are still very valid. And that is, once again, 118 to 120, let's just say. So likely that we come back up into those regions. Again, we really need that confirmation above 115.717. Otherwise, if we start to break these lows, then of course we have to start looking lower. But from where we are right now, this is where I'm looking. The shark, again, still has technical validness down to the 110 region. So something to keep in mind. But for me, I'm wondering if we're just going to front run, the low, maybe even a little bit lower than that, and kind of take everybody off guard. But yet to be seen, but that's the setup at hand, in my opinion. Must be said that we are actually trading into fear now as far as sentiment goes in the market. So again, it's almost comical to see. It doesn't matter what the market is at, right? We could see a $500,000 Bitcoin tomorrow, and if it dropped to $450,000, the market would panic, right? It's just always going to be like this. We were fearful at 3,000, we're fearful at 20,000, you're fearful at 114,000, right? It's just everybody's always going to have those ebbs and flows, and it just is crazy to see, right? But I want to point out that again, we're trading into these areas. We're at pretty much a key support, and the market is trickling into the fear side. All right. Now, personally, I kind of view this whole region probably like from the 40 to 60 mark as pretty neutral. But the fact that we are trading it, more so towards the fearful side is just something of note to just point out that the sentiment is pretty, bearish out there, which is another key factor that I do tend to look for when I'm anticipating a short squeeze to occur. So, by no means am I putting all my eggs in a basket stating that Bitcoin's definitely got to go up from right here, but from where we are at this exact moment, I'd be looking for more of a push to the upside versus a continued move to the downside, at least at the moment, right? So things can change, of course, but this is just how I'm viewing the market as we are right now. Before we continue with the charts, I want to take a quick moment to highlight our sponsor for today's video, and that's DeFi Technologies. Now, this is a name that you may not have heard yet, but it's one that's been making waves in both traditional finance and crypto, and for a good reason. Over the past few years, DeFi tech has consistently outperformed Bitcoin itself, and just to put it into perspective, Bitcoin is up roughly 76% over the past year, while DeFi tech stock has gained over 120%, and stretch that out over 5 years, and we're talking over 9,000% gains compared to just over 1,000%, 10x for Bitcoin, which is a staggering level of outperformance. So how are they pulling this off? DeFi Technologies is building the bridge between TradFi and crypto, which is offering institutional grade exposure to over 65 digital assets. They do this through exchange traded products, or ETPs, that trade on major exchanges like the NASDAQ, CBOE Canada, and Germany. Think of it as crypto exposure made simple, no wallets, no seed phrases, just access through the same brokerage accounts that big institutions and retail investors already use. They've also built out Valor, which is a subsidiary that manages over $800 million in assets through single asset ETPs such as Bitcoin, Ethereum, Solana, Avalanche, and many more. They're also involved in staking and lending, generating an 8% yield on assets under management, and their trading arm has already cleared $100 million in revenues. The company has remained profitable with no debt and even trades at a trailing PE ratio under 10, which is rare to see in this space. That tells you not only are they growing, but they're doing it in a disciplined manner. Investors like Eric Jackson have been early supporters, and voices such as Tom Lee at Fundstrat have also highlighted DeFi tech as a standout play in the market. So whether you're looking at the macro picture or the numbers on the ground here, DeFi tech is positioning itself as a kind of mini BlackRock for the crypto industry, bringing mainstream adoption through regulated, accessible financial products. And if you'd like to learn more about how they're bridging traditional finance with digital assets, I'll have all the details linked down below in the description of this video. Now, in the Traders Club, we've been targeting this area right here for ETH to come into for that next local area to seek a bounce, right? So ideally, of course, it's not the most ideal spot to be looking to purchase and deploy new capital into Ethereum, as we're at $4,000 yet again. And I say that in the comparison of just where we were a few months back, right? So 1,400, not to be a dead horse, of course, but this is definitely the key area where as much as I could, right, I was, stating how much I was, anything below 2K, essentially, I was throwing anything I had into Ethereum. And then, of course, we had the stairs down, elevator up type of scenario. And where we are currently, it's of course, like I said, this is after like a 240% rise. We've got a small little pullback here. So it's just in a local sense, just like this one right here, right? After this huge move to the upside, this was the area to look for that next leg up. Not the most ideal in comparison, but it was the best area to buy, of course. This one to me was the next one from where we are currently. And assuming Bitcoin can reclaim that monthly open, start to see some continued move to the upside as well, and the market kind of recover this recent drop, I am anticipating this area to be where we come out of it and come into that new all-time high on Ethereum once and for all, right? We front ran the all-time high back from 2021 just a bit last week on Wednesday, it looks like. To come up from this region here, the next major zone that I'm targeting for Ethereum is this box area right here, about $5,000 to $5,600, okay? As long as this region holds at the moment, I don't see why we wouldn't continue on up towards that area. I want to highlight something that in the past had been pretty reliable to go off of. Recently, it has not been, so I just want to point that out. Maybe there's a little bit of a severedness that's coming along with this as we evolve as a market. But in the past, anytime that Ethereum would see a major rally, Ethereum Classic would soon follow, and what usually was a doubling of the percentage of rise, right? So what I mean by that is that if we were to see a 50% rally out of Ethereum, ETH Classic would rally towards 100%, and it would be days and weeks that follow, right? It usually wasn't right away. And I've been tracking ETH Classic for quite a while here on these last few years, and like I said, we did have a few times where after ETH did rally, we got these really sizable, basically range rotations from low to high, and then back to the low, and then back to the high, and then back to the low. And recently, with the last little push out of ETH that went 200% plus, we've only seen a little bit over 70% on ETH Classic. By no means am I only looking to it as like, oh, ETH pumped, so this has to pump, but this is something that's definitely trading at the lows. It's got some really big upside if we can get going here. Of course, we need to break this range. The anchored VWAP here is from the overall all-time high from years ago. So in theory here, I'm looking for this to at least probably rotate this range yet again back to $36, ultimately looking to get back above 41. And if that is the case, folks, the macro 382 is my target, and that sits up here at about $76. And from where we are currently, it's about a 260% move, which does put it in line with at least what Ethereum has just rallied, right? So by no means is it a guarantee it could happen. I just want to point out that there is potential here if ETH Classic does get going. And the big one is that if we flip $41, I would be looking for that 76 run. As we keep an eye on how Bitcoin plays out in the days ahead, I want to give a quick shout out to our channel partner yet again, DeFi Technologies, for helping make these updates possible. And if you're looking for deeper insights and daily trade setups, be sure to check out the Traders Club over at DataDashPro.com. Again, this is where you can gain access to the DataDash Traders Club Discord, where I put all my updates, insights, academy videos, everything I have to offer there. You can also get access to Nick's Dash Report newsletter, or bundle the both of them for the full DataDash experience here in the middle. If you're interested in joining just the Traders Club, I do have a discount code available if you come on down and you hit get started, and under promo code put in DASH50. That's going to give you 50% off the first month. You can come in, try out everything, see if it's for you. Again, that's DASH50 for the Traders Club Discord if you'd like to try that out. Thank you all so much as always for tuning into the video. Please be sure to leave a like and a comment if you found this video valuable. I'll see you all in the next video, and until then, everybody, cheers.